Oil is like a wild animal. If it finds an opening, it escapes. And right now, despite all the geopolitical drama, wars, sanctions, instability, oil keeps slipping through the cracks. Here's the headline. Most analysts expect a surplus. That doesn't mean demand is falling. It means supply is growing faster than demand. When that happens, prices feel gravity. Take OPEC+. They've built 3 layers of production cuts, 2 voluntary, 1 group-wide. Over the summer, they brought some barrels back fast to meet travel season demand. But when autumn hit and that seasonal bump faded, they tapped the brakes. Why? Because if they push more barrels out aggressively, prices risk collapsing. So they're cautious now, watching demand, managing tempo, protecting revenue and market share. Sanctions? They create fear and friction, not instant scarcity. Russian barrels are still moving, discounting, opaque trades, shadow fleets, insurance workarounds. You close a door, oil finds a window. That wild animal analogy from the 1800s still holds. Zoom out. Demand is still growing globally, but slower. Some places, think China's EV boom, are easing off oil growth. Others, India and parts of the US, still pull more. Slower growth plus plentiful supply means softer prices and fiercer competition. This is where the game changes. In a market fighting over the same slice of the pie, the winners are lowest cost, lowest carbon. Lowest cost producers, lowest carbon producers. Efficiency isn't PR, it's survival. Look at Saudi Arabia. They're shifting power generation off oil toward gas and renewables to free up crude for export and cut emissions. Stop burning your golden goose at home, sell it abroad and green your grid. And that LNG standoff talk with Europe? Sellers like Qatar have options. If one buyer piles on rules while Asia is hungry, the molecules follow the money. So, boom or bust? Neither. It's a grind. A long competitive slog where agility beats swagger. Surplus keeps a lid on prices. Sanctions slow, but don't stop, flows. The battle of the fittest is won by producers who cut costs, cut carbon, and move fast when openings appear. Oil will always look for an escape. The question is, who's smart enough to be waiting at the exit?